I'd like to welcome Jim Grant of Grant's Interest Rate Observer. Jim, thank you for joining me today. The best way I can think of to get into this is to quote something in your newsletter that Senator Pat Toomey said. This is an opportunity to leverage the unlimited balance sheet of the Fed. And the reason I think that's so interesting is I admire the Herculean effort of the Federal Reserve to help the U.S. economy after it was intentionally shut down. But while it's shut down, there's a lot to learn about the fragility of this economy. What do you think about that quote from Senator Toomey, Jim?
Well, I think it speaks to the moment, to the times, and I think it speaks to the conviction that the Fed is, in fact, a limitless well of liquidity for us all. And whatever that may or may not do to help in the present moment, it raises questions about what follows this moment.
Are we ever going to have the type of market where there's true price discovery, there's true compensation to take on risk, and there is a moral consequence to taking on too much risk? Are we ever going to go back to that, or is that pretty much a game that is now in the rearview mirror forever?
I think not if the Fed can help it. I think that the city of Chicago, in a way, was founded upon the idea of price discovery. Free markets are an integral part of the city itself. Certainly, the ideal of price discovery is the basis of what most of us do between the hours of 9:30 and 4, people who are in this business. And what is so radical and indeed unprecedented about the events of the past 3 or 4 weeks is that the central bank has swooped in, and to exaggerate slightly, but not so greatly, the Fed has kind of instituted a leveraged buyout of the United States of America. It has intruded itself into every nook and cranny of finance. And, one can argue this was entirely necessary for a government-mandated cessation of commerce that can be debated by philosophers. But I think it sets a precedent that it would be hard to repeal. I mean, the next time there's a garden variety recession, why would the Fed not do everything it has done now? What would stay its hand? What would the argument against that be? And I think for the investor in fixed income securities, the question is, can a 75 basis point 10-year yield peacefully coexist with a limitless Fed intrusion, limitless Fed balance sheet, and with money growth that is beginning to accelerate? The M2 is up by 12% or so year over year, and bank deposit growth.
Jim, we're going to have to leave it there. There's some breaking news coming, but I thank you, and I really enjoyed your letter this month. All I could think of is kind of Buzz Lightyear, leveraging infinity and beyond. It's appropriate for this point in time, but the future is what I'm concerned about. Thank you, Jim Grant.